Hello, and welcome back to the channel. I'm AlgoBot, and today we're taking a close, educational look at an expert advisor for MetaTrader 5 called Bollinger Band Reversion. This is a volatility band mean reversion strategy that combines Bollinger Bands with the Relative Strength Index, or RSI, to judge when a price move has stretched too far from its average. Over the next several minutes, we'll explore how the strategy thinks, walk through its actual MQL5 code, and visualize a sample long and short trade on a chart. Everything here is for educational purposes only and not financial advice. Let's get started. Let's start with the big picture. Bollinger Band Reversion is what traders call a mean reversion strategy. The core idea is that price rarely sustains a move far outside its statistical comfort zone. When a market stretches unusually far from its recent average, this approach studies whether that stretch will ease back toward the middle. To measure how far is far, the strategy builds Bollinger Bands. These are a simple moving average of closing prices, called the mean, with an upper and a lower rail placed a set number of standard deviations away. By default, the strategy uses a 20-period average and rails set 2 standard deviations out. When price closes beyond one of those rails, it is statistically stretched. But a single stretched candle is not enough on its own, because sometimes a market is genuinely breaking out rather than easing back. So the strategy adds a second opinion from the Relative Strength Index, a momentum oscillator that gauges whether a move looks exhausted. Only when both the band and the RSI agree does the strategy consider acting. It then aims to fade the extreme back toward the moving average mean, which becomes the take profit. A stop loss based on the average true range sits beyond the rail. So if the market keeps trending and does not ease back, the position is closed in a controlled way. This style tends to appeal to traders who are studying range-bound and oscillating market conditions rather than strong one-directional trends. Remember, this is an educational breakdown of how the logic is built, not financial advice and not a recommendation to trade. Now let's walk through exactly how the strategy makes its decisions. First, the expert advisor works on closed bars only. It waits for the current bar to finish forming before evaluating anything. So its decisions are based on completed price information rather than a flickering, unfinished candle. On each newly closed bar, it reads 3 values: the Bollinger Bands, the RSI, and the average true range, all measured on that freshly closed bar. For a long setup, 2 conditions must both be satisfied. First, the bar must close below the lower Bollinger Band, showing that price has stretched below its normal range. Second, the RSI must be below the oversold threshold, which by default is 30, suggesting that downward momentum looks exhausted. When both line up, the strategy signals a buy. The entry is taken at the current ask price. The take profit is placed at the moving average mean, the middle band, because the aim is for price to fade back to its average. The stop loss is placed below the entry, at a distance of the ATR multiplied by the stop factor, which defaults to 1.5. That stop sits beyond the rail so that a genuine breakdown is closed quickly. The short setup is a mirror image. The bar must close above the upper Bollinger Band, and the RSI must be above the overbought threshold, which defaults to 70. When both agree, the strategy signals a sell at the current bid price. The take profit again sits at the mean, and the stop loss is placed above the entry by the same ATR-based distance. There is one more important rule. The strategy allows only one open position at a time for its magic number, so it will not stack multiple trades on top of each other. It waits for the current position to reach either its take profit or its stop loss before it considers a new signal. There is also a safety check. If the average true range or the bandwidth reads as 0, the strategy simply skips that bar. All of this keeps the logic disciplined and rule-based, which is exactly what helps an expert advisor stay consistent in how it follows its plan. Let's look at the actual MQL5 code that runs inside MetaTrader 5. At the top are the input parameters, and these mirror the strategy's defaults. BandPeriod is 20 and BandDeviations is 2, defining the Bollinger Bands. RSI period is 14, with RsiOversold at 30 and RsiOverbought at 70. ATR period is 14 and AtrStopMult is 1.5, which together size the stop loss. Lots sets the order volume, and magic tags the trades so the expert advisor can recognize its own positions. Now the heart of the logic. The strategy computes 2 simple conditions. The long signal is true when the close is below the lower band and the RSI is under the oversold level. The short signal is true when the close is above the upper band and the RSI is over the overbought level. If the long signal is satisfied, the code reads the ask price as the entry, sets the stop loss 1 ATR multiple below the entry, and sets the take profit at the mean. There is a small guard. If the mean is not above the entry, the take profit falls back to an ATR-based level. Then it calls trade.buy with those levels. The short side is the mirror. On a short signal, the entry is the bid price. The stop loss sits 1 ATR multiple above the entry, and the take profit is again the mean, with the same protective guard before calling trade.sell. Both sides are symmetric, clean, and entirely rule-based. Let's bring the whole strategy to life on a chart. On screen, you can see a euro versus US dollar price chart with the Bollinger Bands drawn over the candles. The upper and lower blue rails mark the edges of the statistical range, and the gray line in the middle is the moving average mean. Below the price, in the lower panel, is the RSI oscillator, with the overbought level at 70 shown in red and the oversold level at 30 shown in green. Watch the opening candles. Price starts near the middle of the range and begins drifting lower, candle after candle. As it falls, notice the RSI in the lower panel sliding downward too, moving from the middle toward the green oversold zone. This tells us that downward momentum is building and the market is starting to look stretched. Now look at the fourth candle. Price closes below the lower blue band, poking outside its normal range, and at the same moment the RSI dips beneath the 30 line into the oversold zone. Both of the strategy's conditions are now satisfied at once. This is where the buy entry appears. The strategy is not predicting that price must rise. It is simply noting that the market has stretched unusually far below its average while momentum looks exhausted, and it fades that extreme. The stop loss is placed below the entry, an ATR-based distance under the band, so that if price keeps falling, the loss is contained. The take profit is set at the mean, the middle line. Follow the next few candles. Price steadies, then begins to climb back toward the middle band. The RSI lifts back out of the oversold zone, confirming the downward pressure has eased. By the seventh candle, price reaches the mean and the take profit is met. The long trade is complete, having faded the extreme back toward the average exactly as the logic intended. Now the market keeps pushing higher, and we get to study the short side. Price rallies candle by candle toward the upper band, and in the lower panel the RSI climbs steadily, heading toward the red overbought zone. On the 10th candle, price closes above the upper blue band, stretching beyond its range to the upside, and the RSI pushes above the 70 line into overbought territory. Both short conditions are now met, and the sell entry appears. Here the logic is the mirror image of the long. The strategy sees price stretched far above its average with momentum looking exhausted, so it fades the move. The stop loss is placed above the entry, an ATR-based distance over the band, protecting against a continued rally. The take profit is set back at the mean. Watch the final candles. Price rolls over and eases lower, back toward the middle band, while the RSI falls away from the overbought zone. By the 13th candle, price returns to the mean and the take profit is met, completing the short trade. So across this single chart you have seen both halves of the strategy, a long that faded a stretch below the lower band, and a short that faded a stretch above the upper band, each confirmed by the RSI and each aiming back to the average. Of course, not every setup behaves this neatly. Sometimes price keeps going and the stop loss is reached instead, which is why that ATR-based stop is such an important part of the design. This walkthrough simply shows how the rules are meant to work, for educational purposes only. That brings us to the end of our breakdown of the Bollinger Band Reversion Expert Advisor. We covered the core idea of mean reversion, how the Bollinger Bands and RSI work together to define a stretched and exhausted move, how the entries and exits are calculated, and how the ATR-based stop manages the trade when the market does not ease back. We also walked through both a long and a short example on the chart. Remember, everything in this video is educational information only and is not financial advice, a recommendation, or a solicitation to trade. Trading carries risk, and losses do happen. If you found this useful, please like the video, subscribe for more MT5 strategy analyses, and leave a comment with the strategy you'd like us to break down next. You can learn more at www.RsiOverbought.live. Past performance does not guarantee future results. Trade responsibly.